Working capital is that part of the capital of a company that is employed in its day to day functioning. It includes current assets and current liability. Working capital can be of two types: gross working capital and net working capital. Gross working capital is equal to current assets, and net working capital is equal to current assets minus current liabilities. Today we are discussing factors affecting working capital requirements. First is nature of business. The amount of working capital requirement depends upon the nature of the business. It will be different for trading and manufacturing concern. In case of a trading concern, less working capital is required as there is no processing of raw material into finished products. In manufacturing concern, raw material need to be converted into finished products, therefore requirement will be more of the working capital. Scale of operation. Second point. If the organization works on a larger scale, then more working capital will be required for the operation, like more quantum of inventory. Whereas if the organization is working on a smaller scale, then less working capital will be required. Business cycle. Working capital requirement of a firm depends upon the variation in the economies. During boom condition, business activities result in a need for larger cash and higher inventories requiring more working capital. During depression, sales as well as production will be low, therefore it would be a requirement of less working capital. Fourth point is seasonal factor. Most business operate on a seasonal basis. In a peak season, because the demand is high and there is a higher level of activity, more working capital will be required. During off season, the sales are low, therefore less working capital will be required. Fifth point is production cycle. Production cycle is the time lag between the receipt of raw material and their conversion into the finished products. Length of production cycle also affect working capital decision. More working capital will be required if the time taken for production cycle is longer, as funds will be required to meet day-to-day operational expenses over a longer period of time and vice versa. Next point is credit allowed. Different firms allow different credit terms to their customers. These depend upon the level of competition than that of a firm faces as well as the credit worthiness of their clientele. A liberal credit policy result in higher amount of debtors, increasing the requirement of the working capital and vice versa. 7 point is credit availed. Just as a firm allow credit to its customer, it also may get credit from its supplier. If a firm avail the credit on its purchases, then payment can be made at a future date. Therefore, the working capital requirement will be reduced and vice versa. Eighth point is operating efficiency. Firms manage their operations with varied degree of the efficiency. For example, a firm managing its raw material efficiently may be able to manage with a smaller balance. Such efficiency may reduce the level of the raw material, finished goods and debtors, resulting in lower requirement of working capital. Ninth point is availability of the raw material. If the raw material and other required material are available freely and continuously, lower stock level may suffice. In addition, the time lag between the placement of order and actual receipt of the material is also relevant. Higher the lead time, higher the quantity of the material to be stored at a higher is the amount of the working capital requirement. Growth prospect. If the growth prospect of a concern is perceived to be higher, it will be require higher amount of working capital so that is able to meet the higher production and sales target whenever required. Level of competition. Higher level of competitiveness may necessitate higher stock of the finished goods to meet the urgent order from customers. This increases the Working capital requirement. Competition may also force a firm extend liberal credit terms discussed earlier. 12th point and the last point is inflation. With rising prices, higher amount are required even to maintain the constant volume of the production and sales. The working capital requirement of a firm or business just becomes higher with higher rate of inflation. Inflation means price rise. So let's revise. Inflation, more working capital and vice versa. Level of competition, if high, then more working capital and vice versa. Growth prospect, if high, more working capital and vice versa. Availability of the raw material is less, then less